Hello everyone, welcome back. Welcome back to the chat room. This is Ed Ponzi. Great to be here with you. Speaking to you on a Thursday night. It's in early September. And wow, look at that candle on the euro. Pretty amazing day. You know, is it bittersweet that we made 350 pips and then covered it and then it dropped another nearly 200 pips? Yeah, a little, but look, that's why you create a plan and you stick with it. If we weren't the type of traders who created plans and stick with them, then we probably would have never made 350. We would have probably gotten excited somewhere on the way down and closed out the trade. So it's a trick that traders play on themselves, our minds play on us, is that we're always wondering about what we could have had or what could have been. But the truth is, if we did that all the time, then we probably wouldn't be doing as well as we are. And we are doing pretty well. It's been a pretty great year. And certainly that 350 pip euro trade definitely makes a big difference. And congratulations to everyone who was there for that. We have some questions, so I'm going to get to those first. And we'll answer your questions. So first up, Ed, you teach us that it is not wise to hold a stock into earnings. Is the same true for the launch of a new product like Apple is launching right now? Is the expectation too high? Well, maybe I should be a little more specific. I don't necessarily think it's always a bad idea to hold a stock into earnings. I mean, we held JCPenney into earnings, and that worked out pretty well. And we held Apple into earnings, and that worked out pretty well. But now that it's going the other way, everyone's getting a little bit nervous. You have to look at what is the catalyst for this sell-off. Really, the catalyst for the sell-off is an analyst. You see a pretty big volume on yesterday's sell-off, and today, less than half of the average volume. The volume disappeared today. So I think this is probably just about over. There's no bad news on the stock. It was one analyst company that came out and said, Apple's really gone up a lot. It's gone up 31% since the last time it reported earnings, so it might make sense to sell a little bit going into this event. That's what they said. Well, you know what? Yeah, that's true. It did go up 31% since earnings because you know what? We made most of that 31%, so we're pretty happy about that. But there's no reason to sell except because it went up. That's the only reason that they're using. To me, that's not really a good enough reason to sell. Now, hey, maybe I'll end up regretting that. I don't know. But this is a very bullish stock. That went through a very rough day. And you always look at the reasons why. You say, well, why was this stock sold off so hard? Just because someone thinks it's gone up too much isn't really a good enough reason, in my opinion. As far as September 9th, next week, I guess we'll get a chance to talk about that before it happens. They're expecting the iPhone 6 and possibly some announcements of other new products. Unknown if those products will be available right away. A lot of speculation that Apple's going to start introduce the iWatch, or we don't really know what it's called. People call it an iWatch. It's not a watch. Okay, it's not a watch. They're going to introduce some type of wearable wristband device that would, I've talked about many times on here that I have very high expectations for this. They've been working on it for a long time. They've put an awful lot of time and money into it. So I think they're coming up with something very special. So because of that, I'm really not that keen on selling. I think that, this was simply just an overreaction. Now, as far as the market itself is having a very difficult time with 2000. And here we go again, like just a lot of spinning tops and dojis and just small-bodied candles, and just this has gone nowhere in 2 weeks. That's why we have long positions and short positions. Okay, we are protected in the event of a downturn. Okay, another stock that we held into earnings was JCPenney. We're mighty happy about JCPenney. We held into earnings. We bought at 860, closes at 1118 today, and we're still holding it because there's still upside. Okay, we want to have some long positions. We want to have some short positions. We're going to get to Forex in a second, gang, but we're going to talk about stocks first since we're on the topic here. So we're long Apple, we're long JCPenney, we're up big on both. And the thing about the JCPenney actually looks even better to me now because of the action of the past few days. You might recognize this. It's a sort of a I guess we'd call that a bull flag. Having a hard time drawing it correctly, but there, it looks something like that. That to me looks like a little bit like a bull flag, like you have the strong move up, the flag down, and now we begin to move up. So you have 4 sessions here where the bears are having their way. Right, we have the big run up, and then 1, 2, 3, 4 consecutive days where the bears are winning. Every day it closes lower, every day a red candle. And then boom, we gap up and we go. And everyone who shorted during these 4 days is now just getting crushed. Every single person who shorted JCPenney during those 4 days is now in pain. And that leads me to believe that we could go higher. We're up about 30% on JCPenney. We were up about 30% on Apple. Now we're only up probably around 23, 24% after the sell-off, pretty hard sell-off the last few days. Just remember, we didn't panic on JCPenney. When they pulled back, we're not panicking on Apple when it pulls back. Am I a little bit nervous because of the volume on Apple? Yeah, and it bears watching. And listen, if it does break apart badly, then then I'll revisit it. But the truth is, Apple was down, not on any specific company news, just because some guy out there thinks it's gone up a lot, and therefore it should come back down. And that to me isn't a real reason. It's not a real reason. Our other long position is Dean Foods. Dean Foods has done nothing for us, but we're up so much on Apple, and we're up so much on JCPenney that we can handle this being down on Dean Foods a little bit. We have our short positions in Lulu. Lulu's been very good to us, and it looks like it's about to get better. If I look at this chart, I got to say that there's definitely support in this area. You could even say that it's slightly rising, series of lower highs, but that looks to me like it wants to break. How's that chart look to you now? Like it wants to go lower, and like it's probably going to gap down again at some point. So good on that one. Kimberly-Clark, we're very happy with this. It's not gone against us. It's not gone in our favor. But as the stock market bounced up to all-time highs, this stock barely climbed above its 200-day moving average. Nothing special there. The only other one, man, this is the one that pains me, TJ Maxx. We got to cut. We're closing this one tomorrow. I'm sorry. I just can't hold a stock that goes against me like this. We'll find a different short. I'll tell you what I have in mind. We're going to close TJ Maxx, and we're going to instead of shorting another retailer, we're going to short a casino stock. There's 2 to choose from that both look pretty bearish. There's Las Vegas Sands. That looks pretty bad, but it's already pretty badly hammered. And then there's Wynn. Wynn is just breaking down now, so I think Wynn is probably the one. But it's you say, well, Wynn has more catching up to do, but at the same time, Sands broke down first because it's weaker, so maybe we short Sands. Either one of those would be fine, though, to short. So that's what you'll probably see me tomorrow cover the short on TJ Maxx and initiate a short position in either LVS or WYNN. Those casino stocks look brutal. What's going on? Too much supply. Okay, they keep building more and more casinos, and then you get what we have in Atlantic City here in the U.S., where we have 3 casinos close in 2 weeks, and and 1/3 of the casinos in this, 1/4 of the casinos in the city closed all of a sudden, and because you just cannot, there's not enough demand to meet supply, and more supply. Every time they build a new casino, more supply comes on board. Now Sands, LVS, they really hurt Atlantic City when they built a casino in Pennsylvania called in Bethlehem, PA. They built a casino. They really hurt Atlantic City. Now New Jersey's going to strike back and hurt Sands by building casinos in North Jersey. A lot of the clientele are coming from the New York City area. We're going to see new casinos going up in North Jersey. We're going to see new casinos going up in New York State. Those new casinos will cannibalize old casinos, and it's going to be bad. It's going to be bad. So I love the idea of shorting casino stocks, and it'll give us a little more variety, let's say, right? A little more diversification in the stocks that we're short. One last thing I want to point out about Apple before we move on to currencies is this. A lot of people are worried that if Apple comes up with a new iPhone with a great big screen, people are saying, well, there's no reason to buy an iPad. The big screen phone serves as a replacement for the iPad, and it's going to cannibalize the iPad. Is this true? Yes, it is. But that's not necessarily a bad thing. Let me explain why. Remember the iPod? The iPod at one time was the hottest product in the world and definitely Apple's star product, the iPod. This was 5-6 years ago. Then Apple began to incorporate iPods into iPhones. This cannibalized iPod sales. iPod sales plummeted because you basically have an iPhone that has an iPod inside of it. Was it a mistake to do that? Absolutely not. Incorporating the iPod into the iPhone helped to make the iPhone the most dominant smartphone in the world. And if you now make it with a bigger screen and you incorporate the iPad, yes, you will be cannibalizing the iPad, but believe me, there are a lot of people out there who really want an iPhone with a bigger screen. And so it is going to cause the iPhone to become, again, the more dominant product. So you can't always worry about cannibalizing your products, because the truth is, if you don't do it, somebody else is going to do it. Samsung already has the big screen phones, right? Microsoft already has Surface, which is a tablet computer that is essentially a replacement for a laptop. iPads aren't going to go away. They're going to replace your laptops, and your laptops are going to replace your desktops. And it's going to happen whether Apple likes it or not. So you might as well ride the forefront of that change instead of being left behind. There you go, right? Does that make sense? All right, so yeah, a lot of people are afraid about the iPad being cannibalized. I think it's the right thing to do in the long run, because if you don't do it, someone else will. And now, also, one last point about Apple. When they cannibalized the iPod, how did they replace sales? Because all those iPod sales, everybody stopped buying iPods. All the iPod sales disappeared. How do they replace it? With a new product. That was the iPad. Now if the iPad becomes cannibalized, how will they replace those sales? With a new product again. The wearable device, I think, is going to be dominant. Okay, and it is going to be a game changer, and it could become potentially more popular than the iPhone. Okay, so it's just something to chew on. Okay, all right, let's get back to the world of currencies, because we started with a stock question. That's why we went with stocks first. So I hope all my currency peeps out there don't mind. We've got plenty to discuss when it comes to currencies. And just to clarify, I don't necessarily think it's unwise to hold a stock into earnings. I think it depends. I mean, if you're a short-term trader, then yeah, don't hold into earnings. But something like what we did with JCPenney, holding JCPenney into earnings was the best move we could have made, right? That's when the stock really popped. When JCPenney really popped was after earnings, and now it looks like it wants to go further. Good stuff. Thank you very much for the questions. Here's a one about pound yen. So we're going to pull that chart. I guess we can get rid of that triangle because that line is long broken. We're basically just going sideways here. Two weak currencies, the British pound and the Japanese yen. Please give me your insight. AstraZeneca is holding out. Pfizer is not giving up. Something huge on the horizon, maybe? Honestly, I haven't heard anything at all about Pfizer and AstraZeneca recently. We know that was a big potential merger that fell through, but I haven't heard anything about it lately. Of course, we're interested in that. Why? Because if Pfizer has to send AstraZeneca a lot of money, that's going to move the British pound. And the question goes on, I see that as the first British pound mover. Yeah, that is potentially a big mover if it happens, but I don't think anybody knows. I don't think anybody knows if that is going to happen. The second is British pound priced in independence from Ireland. It's actually Scotland. I don't see that happening. Well, here's the thing. The polls changed pretty dramatically in the UK. There was a huge lead. You know, this secession away from the UK by Scotland was going to be defeated by a huge margin. And suddenly, as we now get very close to the voting time to vote on this, now it's almost even. Now it's almost even. And nobody likes that type of uncertainty. So I envision a lot of potential scenarios. I think it's possible that Scotland could vote for independence and then strike a deal with the UK. That's a possibility to prevent it from happening. That's one possibility. Maybe a Scottish vote convinces the UK to move away from the Eurozone. You know, Great Britain is part of the European Union. Most currency traders don't realize that. It is not part of the European Monetary Union, monetary as in money. They don't use the euro. They use the British pound. But they are still part of the European Union, and that means laws are passed in Brussels that affect people in London and Manchester, and there are and in Scotland as well, and not everyone likes that. So it's very possible that this could lead to something bigger. But I don't think Scotland is going to secede from Great Britain. No matter really how the election turns out, I think the election can turn one way, and if Scottish citizens vote to leave the UK, that just gives them power, negotiating power, in my opinion. It doesn't necessarily mean they're going to follow through and leave. Okay, great question. And I see bulls rushing back. Pound yen looks to be a buy soon. Well, you know, listen, I look at this chart. It's just not that inspiring. Because the British pound is obviously a very weak currency. The Japanese yen is a very weak currency right now. So it's two weaklings fighting it out. And, you know, my preference would be strong versus weak, not weak versus weak. This is strong versus weak. The U.S. dollar against New Zealand. New Zealand just getting slaughtered here by the U.S. dollar. That's strong versus weak. Euro against U.S. dollar. Pound against U.S. dollar. Swiss franc against U.S. dollar. The U.S. dollar is crushing most currencies. Okay, the U.S. dollar is extremely strong. Canada looks like it could be forming an inverse head and shoulders. But I'm not that crazy about it because what I like to see, before I see this pattern form, that's clearly the right shape, left, head, right. But I would prefer to see a huge down move before I see that pattern form. I don't see this as a huge move. Right? It's a downward move, but it's not. For a reversal pattern to really carry a lot of weight, you need something to reverse, like a big trend. You know, if a head and shoulders formed on this, I mean, there's a wicked trend right now on Euro USD. If an inverted head and shoulders formed on this, then I'd say, wow, we're going to reverse this massive trend. But in dollar Canada, there's nothing that big to reverse. So therefore, I don't give it quite as much weight. Does that make sense? I don't treat it quite as seriously as I would otherwise. Okay? All right. Let's move on. Great questions as always, everybody. Hope everyone out there is having fun. Let's move on. Boy, I love getting these kind of emails. Hello, Ed. I followed your trade plan on Euro USD and I made 350 pips! Exclamation point, exclamation point, exclamation point. Congratulations. And I know that, and I've received several emails like that, so I know at least a couple of you made bank on this. And I certainly hope, in addition to making money, I certainly hope we learned a thing or two about how it's done. On with the question. Thank you for the lessons. I have a question on Euro Swiss. Let's go to Euro Swiss. And this is something that I am in right now. I'm long that Euro Swiss. You can see that big wicks from the ECB announcement, Mario Draghi, you've probably heard by now, came out and announced that quantitative easing is about to begin in Europe beginning in October, which is only 1 month away. So you're going to see quantitative easing very soon. They're going to buy asset-backed securities, which means they could buy bonds, they could buy mortgage, but not just not just government bonds. They can buy mortgage-backed bonds. They're probably going to be doing a lot of that, buying mortgage-backed bonds. Personally, I think it's a desperation move because quantitative easing is designed to drive interest rates down. Interest rates in Europe right now are about as low as they've ever been. So I really don't see this making a big difference. And even with interest rates as low as they are right now, you have very weak GDP numbers in Europe. You have very weak Purchasing Managers Index, PMI numbers in Europe, very weak. You can't just wish that stuff away and say, okay, well, we're going to do quantitative easing and that's going to make everything better. I don't see it. And the third problem that they have, in addition to GDP and PMI, is falling prices. Prices are falling in Europe. And then there's no two ways about that. There's no way around it. Let's take a look at some of the figures. Okay, first of all, GDP numbers. Okay, year over year, this is Germany. This is supposed to be the strongest one in Europe. 0.8 year over year, less than 1%. And if you go quarter over quarter, minus 0.2. That's halfway to a recession right there. You get 2 consecutive negative quarters, you're in a recession. That's the technical definition. So that stinks. And the GDP numbers out of the other European countries were no better. Now look at the PMI numbers. Red, red, red. This one's green, but it's 46.9. I mean, anything under 50 shows contraction. So the expectations were obviously very low to begin with. It's just red, red, red. And all these PMI numbers are very close to 50, if not under 50. That's pretty scary. And that means PMI is an early indicator for GDP. So not only does GDP look bad, it's probably going to look worse based on these PMI numbers. It's not going to get better. And then I'll just take you to one last little bit of information. Prices. So for example, year over year, producer prices are down 1.1% in Europe. Prices are falling. Okay? These are all the things that they don't want to see are all happening at the same time. Okay, prices are falling, GDP is virtually non-existent, growth is non-existent, and PMIs are showing that growth is not going to improve in the near term. So what does Draghi do? Draghi came out today and said, yeah, we're going to do quantitative easing. It seems that Germany maybe had some misgivings about this, but they worked around it. They worked around Germany. So a huge impact on Euro USD, but not so much on Euro Swiss. We saw a short drop, quick drop here. There's Mr. Draghi speaking. And this looks like the world's ending, but it's only from 75 down to 45. It's a 30-pip move. That's a big move for this currency pair right now, but it's not that big of a deal. And we got underneath 120.50, and the price popped up again a little bit. So really nothing happened here. I mean, if you take it from before the news comes out and after the news comes out, it's like a 10-pip difference. It's no difference worth mentioning. Okay, so the events of today don't really mean that much for the Euro-Swiss currency pair. Swiss National Bank, Thomas Jordan, head of the SNB, says he is standing by and will purchase unlimited quantities of euros. I love the sound of that, unlimited quantities. Okay, now the question is, if the Swiss National Bank does intervene, and there's the line in the sand at 120, if they do intervene, would I make a trade plan to get out of this trade around 123.50 to 124 mark? Let's see. Now, first of all, that makes perfect sense, technically speaking. So in other words, when it popped last time, let's go back, I'll take you back to the last time, the price was down in that area. It popped up to 121, and then it popped up to above 123.50 and higher. But here's the thing. The exit on this is going to be, you can't really use technical analysis, in my opinion, to create the exits here. Or if you do, it just might not matter that much. Did the price go up because, did the price stop going up here because it hit sellers? Or did it stop going up because the Swiss National Bank stopped buying, stopped pushing it up? We'll never know. So is that real resistance up here? Or was that just the point where the Swiss National Bank said, okay, we're done pushing? See the problem? So it is a little bit tougher to make exit plans on this. The way that I would just phrase it for now is that exits are discretionary. Okay, exits are discretionary, and even when it did, this is the weekly, even when it did pop up, you had weeks to figure it out. You had a long time to figure it out. So I can't really set up those type of exits right now. In order to really know what to do, I'm going to have to constantly monitor the news. This is something where it's more of a fundamental trade than a technical trade, right? And so we really have to pay more attention to the fundamentals to figure out where we get out once this thing begins to go. But that's a great question, and I really do appreciate it. And I'm really happy you made 350 pips on Euro. I know that I was walking around with a big smile on my face too, because it's always great to win, but it's even better to share your victory, and a lot of us shared that victory here in the room. So that makes me that gives me a lot of happiness. Okay. All right, everybody, that's going to do it. Oh, Friday, non-farm payrolls on Friday, right? So obviously you probably don't want to do anything new ahead of that, unless it's Euro-Swiss. I really don't think Euro-Swiss is going to be affected. But non-farm payrolls, they're looking for 225. ADP came out a little bit light, so it's possible that maybe it comes out, non-farm comes out a little bit light too. We'll see. But non-farm payrolls coming up on Friday morning. I'm long the Euro-Swiss, and that's pretty much it for now. All right, gang, thank you so much for listening, and I'll talk to you again very, very soon. Everybody take care.